All right, welcome to today's show for the young tycoons. This is for people who are like that 18 to 38, maybe you're a little older, but you're interested in becoming a tycoon in real estate. And I really want to help you. I know a lot of people kind of count out the younger generation. They talk trash about millennials and things like that, but the reality of it is you guys are the ones who are going to make this next world work. Right, between AI, Bitcoin, all the other things that are happening, and even in real estate, all the different changes that are going on in real estate right now. Like we need you guys. So I'm betting on you guys to succeed while I'm building my own company because the goal is at some point in your life or my life, you see this and either you want to work with us or I inspire you to do more. I wish I had this information when I was younger because I just didn't have it. All right. So with today's show, though, I want to go over something. I want to clear something up because I was talking to a buddy of mine about it yesterday. I was like, when I got into real estate, I would have been much further along had I really understood the value of what I was learning at the time, right? I didn't really understand that real estate in itself is really a finance game. It's a money game, right? Finance meaning the management of money, right? But I didn't understand that. And I wish I did because had I known that, number one, I would have never sold anything. That was one of my biggest mistakes. Most of my multifamily real estate that was actually doing really good and that wasn't a giant headache for me, I would have kept. I'm rolling my sleeves up because the shirt looks terrible on video. But anyways, that was one other thing. I would have never sold anything because I would have realized that real estate was a financial vehicle, not real estate itself. It's a product. So, knowing that I was in the management of actual money, I would have been better off because I would have saw myself differently. I would have made better connections. I would have made better relationships. And that's what I wanted to share with you guys today. So if you're going to be a young tycoon or you're going to actually advance yourself into becoming a real estate tycoon, a mogul, putting together 10 billion, 10 million, 20 million, 50 million, 100 million, or like if you want to be someone like me later on in my career, eventually put together a $50 billion real estate portfolio, $50 billion of assets under management with Bell Capital at some point in my lifetime, you're going to have to learn what I had to learn later on in my years. I'm 50. I'm 51. As a matter of fact, I'll be 52. I still didn't understand, maybe up until about 5 years ago, that I was in the finance industry, not the real estate industry. The real estate was only a vehicle. So, reason why I share that with you is because once you kind of get that, there's a money game being played, not a real estate game being played. If you're young, then you start thinking differently about what you're doing. You're not thinking about how do I wholesale a deal and flip a house? How do I buy a property and make a little bit of money? And so I'm financially free, if that's what it says. It goes without saying you're going to eventually make some money if you're in real estate because real estate is capital intensive. It is not a business like you're selling t-shirts where you're going to go sell a shirt and make $10 on profit, or there's this leakage in your business where you get a bunch of customers, they do a bunch of refunds, there's leakage and breakage in your capital and your growth, and then you have to put that back together. Real estate's not like that. You buy something, you hold on to it if it cash flows, and you exit that deal, multiple exits, but it all takes a combination of a couple of things, which is why I said you're in the real estate, the money game of finance and management of capital. So number one thing that you need to learn or understand if you're going to play this game, real estate as it relates to growing a portfolio, building your network around a net worth around this asset class, is you're going to have to learn how to talk to and talk about real estate as an investment, right? Um, like right now, I have CNBC on right now, and they're talking about earnings and things like that. So there's a lot of stock investments going on. Keep rolling this shirt up, man. It's crazy. But real estate itself, if you talk about real estate as an investment opportunity to people, whether it's your investors, whether you work at Bell Capital, you're talking to our investors or your own investors or your family, your friends, whatever, your banker, the people that you know, at some point you have to treat it like an investment opportunity, not a piece of real estate. Real estate is great, but if you're not doing it, if you're not like me, where I'm like geeked up about real estate, I love real estate, but I really love what it can do for me and my family, right? Talk about it like an investment opportunity to other people, how you're going to make money with it, how we are going to partner and make money, how we're going to go find this piece of real estate. It's going to cash flow. It's going to pay us. And this is what you get. And this is what I get. That's an investment opportunity, right? So you have to learn the language of that. So how does that work? Number one, how do returns even work? What is an internal rate of return, an average rate of return, or an annualized average return on your investment? Like these are terms that you have to learn. And if you watch my other videos, I go through those things. But your internal rate of return, how is that even measured? Based on opportunity if you're presenting it to an investor, right? That's cash flow plus the overall collection of the money that you made on that deal over time, right? That's your internal rate of return. Like those things are important because people want to know, hey, what's my target internal rate of return? Or what is your equity multiple? Like how much, like the amount of money that we put in times two, right? If we put in $50 million, we're gonna make $100 million, right? On our 50 million. Like those are the things that all have to come. That's a double. It's called a double, right? Or double, you can double or triple. We've doubled, we've tripled. We've done infinite returns on our investments. But you have to know what these things are. Now you can Google these, you can get my new book that just came out. You can go to bell-capital.com/wealth book. In the back of there, I have a bonus section that goes over all of the terms as it relates to wealth creation, which goes over it goes over return terminology, investment terminology, all of these things. I think there's over 100 terms that you can get access to, but you need to know what they are. Very important. And then next, not only do you need to learn the terms and terminology and how returns work as you're talking to people, you need to also understand how debt works, financing. So finance is the management of money, but financing is the basically you're financing a deal. You're giving money towards a deal. This is the debt, right? So a multifamily, usually on good multifamily, you don't want to over leverage a deal. So typically you're going to leverage a deal up to 70%, right? That's usually the highest. If you're going Fannie Freddie, I like to go 60-40, 60% on debt, 40% on the equity or the capital that we need to raise as it relates to equity, meaning the down payment, right? But you got to know that. How does the debt work? What is the rate? Like how, what is the rate? Maybe the interest rate's 5%, 6% right now. What is it backed by? What like is it the 10-year treasury? Is it the SOFR? Like all there's a bunch of other things as it relates to money is concerned about how the debt works on your financing. Because like I said, real estate is an investment, it's a financial instrument. Right. So you have to learn how to talk in money terms. It's a money game that you're playing. And if you're talking to anybody, high level and lower level, you need to have a better understanding. And once you understand it, you can simplify it. But you need to understand how the debt works. You need to know what loan to cost is versus loan to value. You need to learn like, hey, how much are they going to give me? How much can I borrow? What is the interest rate? What is the term? What is the schedule? Like, is it going to be a 30-year amortization schedule or is it done on 25 or is it done on 35? Are they going to give me a 3-year term? I mean, on commercial real estate, they usually do 3, 5, and 10-year terms. What happens at the end of those terms? Is it a fixed interest rate, meaning my rate's going to be 5 to 6% fixed, or is it going to be a floating rate where it's going to be 5% to go and then the next year it's going to adjust? Or is it going to be a 3-year term fixed and then after that you have a 2-year term afloat, meaning it's going to be 3 years of 5%, and then as that last the 3 years have passed, 2 years come, and then it adjusts. You have to know all this stuff because you have to understand also how debt works, which is why I said real estate is a financial vehicle. You're in the money game. But if you don't know these things, and you got to learn them, right? It takes time. I'm not saying that it's not going to be hard, but I am going to say you have to understand that this is where you're headed if you're going to play this game. All right. So next, you have to learn how to underwrite, or you have to know how to underwrite a deal. Now, when I talk about underwriting a deal, a lot of times people talk about, oh, like, what are we going to pay for? Yes, what are you going to pay for? But when you underwrite a deal based on buying it, you're buying cash, you're buying cash flow, you're buying income, and you're buying the expenses, you're buying employees, you're buying everything. So you also have to know how to underwrite an asset, right? If it's multifamily, which is what I tell you guys to focus on, especially if you're young to get into this game, you need cash flow. Your investors are going to need cash flow if you're doing it with investors or partners. Your bank or your lender is definitely going to want cash flow because they're going to be like, hey, is this going to cover the debt? So when you're underwriting a deal, you're not underwriting the real estate per se. You need to first underwrite the financing of the deal. Financing meaning like how much money is this thing making? The management of that money. So how much is the income? How much is the rental income? Additional income? Concessions, like meaning like the rents are $2,000, but you're doing a move-in special. Instead of $2,000, it's going to be I don't know, 1,800 bucks. Like that concession, that $200 concession, like you lowered that to let people in. Like how much is that? And then what are the expenses? What are the taxes? What are the insurance? What is the operating cost? Are you paying all the electric? Are the tenants paying the electric? What are the common area and maintenance of electric? Those expenses are money that goes out. Income that comes in from your rental income, additional income, dog, pet, extra stuff. And then you have your expenses, which is all money that income, inflow capital. And then expenses mean like it goes out, right? Like you need to know exactly what that is because it's all money. And then what's left over is what's called your NOI, or your net operating income. Like, all of these are how you underwrite a deal, and your net operating income, meaning like what's left over after income and expenses, actually pays the debt, which is why I said you got to understand how debt works too. This is all money management if you buy an actual deal, because you're in the finance world. You're not really in the real estate space. Real estate's the vehicle, but you're in finance, you're in money management. Next, you also want to understand how to exit the deal, because that's the biggest thing you have to tell your investors. How are we going to get out? And you need to have multiple exits. You can't just sell. It's not stock. So you can buy a stock, sell a stock today. That's why Warren Buffett says, I like stock better than I do real estate, because I can move hundreds of millions of dollars today and I can exit on hundreds of millions of dollars tomorrow. But if you're in a real asset, meaning like you don't have the fluctuations and you're in real estate and you're managing capital, you need to understand what your exits are. Are you going to sell that asset, and who are you going to sell it to? Are you going to sell it to another group of doctors? Let's say you're a physician. You and your doctors buddies get together, or you invest with somebody like me. Like when I'm looking at a deal, I'm like, can we invest? Can we exit to a group? Who's the groups? Are they institutional guys? Are they local players? Are they other syndicators in the market? Or if you're doing a small deal, who's going to buy it? Is it going to be a mom and pop? Are they going to buy a bunch of other properties? How are you going to do it? Are you just going to sell? Or are you going to go back to your lender, like we said, understanding debt and financing, and go, can we refinance? Meaning, can we reset the clock on the money that we borrowed and borrow against it again and take out some of our money, or change the rate? That's what I said. Like, it's not complicated once you get it. So if I'm complicating you, I'm sorry. But this is why I wanted to tell you guys, if you're going to play this game, you need to be a financial engineer genius. Basically, you need to understand money and how money flows in and out. Like, if you do, and what the cost of money is and how to play that game. So you can sell it, you can refinance it, you can refinance and take money out. You can refinance and just lower your interest rate so you make more money on your cash flow. You can refinance and take all of your money out. You can do that as well. Or you can take all of your assets and bundle them all up, and then you can get a portfolio loan, which you go back to your lender and go, look, I got 20 properties on one deal. Let's say you have 24 plexes. Not right. So now you got, what is that? 80 units. You have 80 units all on this one spreadsheet. Now you get a portfolio loan against your 80 units, right? And now you got to understand the debt now. Like, what is that going to do? What is my interest rate going to be? What is the income and expenses on all these properties, and how do they balance out? How am I going to pay my loan? If now I'm getting this portfolio loan against these properties, how much equity, meaning cash, can I pull out to do what now? Because now you have this equity, but you need to do something with it because you borrowed it, right? There's an interest rate, the juice is running. Now you have to go and reinvest that money into what? Something that makes money, because again, you're managing capital. Real estate's the vehicle that pays for the capital. Now you have to know how to manage the capital, right? And then how do you do the partner splits? No, with us, we do an 80-20 split at Bell Capital. Why? Because I'm going after better quality assets and I'm scaling my real estate investment company by raising capital, right? So naturally, I'm giving the investors more of a split because I understand that that's a better way for me to do this thing. But if you are just starting off, you're going to be this tycoon and you're buying for yourself. Maybe you're going to get partners, family, and friends or something like that. How do you split it? Do you do 50-50? You're going to find the deals, get all the financing, or get it all done. You're going to get money from them and you're going to do all of the work, and you're going to split 50-50 on the profit for them. That's a good deal. I did that for years, man. I just started this 80-20 split. I've only done 50-50. Right. But I'm now scaling and growing more. So I want more investors. So I'm giving the benefit to my investors. Right. But for you, maybe you're starting off and you're like, how do I do this, man? I'm going to do this with my mom and my brother. Good. Go do that. You do a 50-50 split. They put in the money, you put in the deal. You manage the deal, manage the tenants, manage the termites, manage the headaches, the toilets, do whatever you're going to do. And then they get 50% of the profit, or they get 50% of the cash flow, and they get 50% of the profit when you sell. Like, that's why I said this is a financial game. You're really playing a money game. This is a money game. So you have to understand the rules of money. How does interest work, returns work, partnerships work, splits work? How do you liquidate the properties that you buy, or the assets, which are called assets? If you go in the banking world or finance world, they're not, they say properties, but they're thinking asset, because an asset has income and expenses. It makes money. And you have to think the way money people think, not just the way a real estate person thinks. And that's how a lot of times, if you've been in this real estate business for a long time, if you're a young tycoon, you're just getting started, you're coming off of your job, you have a business and you want to get going. That's why a lot of them just say, look, you know what? once I really got into this and I started learning the do's and the don'ts, what I need to know, what I don't want to know, dude, I don't want to do all this. I'd rather just invest with a guy like Vic at Bell Capital and just get this stuff done. Or if you're new, you'd be like, look, I don't want to learn all this, or I can't learn it on my own fast enough. I'll just go work with Bell Capital and be like, hey, I'll work with them in their investor relations team. I'll help them raise capital. I'll learn how to talk to high net worth individuals. I'll wet my beak. I'll build my chops on learning how to communicate effectively to high net worth people, people who are elite entrepreneurs, business owners, so I can get a better understanding and be around Vic and his team to understand exactly what that means. But had somebody taught me this, like I learned this first. I was working with Bob Leonetti over at Success Mortgages. They were doing mortgages at the time. They were doing second mortgages, buying mortgages, rolling up all the mortgages that they bought back, and then selling it on a warehouse line back, and then replenishing that warehouse line. A warehouse line basically is a line of credit from a bigger lender down to them, and then they get to lend that money out. And then once they lend it all out, they repackage it, give it back to the big lender. They clear that out, meaning the money, because they got it back, and now they repackage and give them more money to do. I learned in that industry first. I thought I was doing real estate. I'm going off buying deals, partnering with Bob, and then Bob puts in the money, and then I turn around, do all the work. We split profit 50-50. I make some money, he makes some money. But I also got exposed to, hey, this is how you structure a note. This is the interest rate. This is the terms. This is the timelines. This is the position. First position on the mortgage, second position on the mortgage. We can repackage all this stuff, right? Then later, I got into creative financing where I started doing my own stuff. If I owed a seller $100,000, and I'm like, hey, I'll just pay you when I resell the property. No payments, no interest, no balloon on that. So I started structuring, creating finance out of thin air, creating money out of thin air, which is called finance, right? For me. So I learned the finance game in real estate instead of it being through business, buying business acquisitions and buying businesses and structuring all these different deals and just different ways to create money. I was doing it, I just didn't know. Like I said, had somebody taught me, I was learning the money game and finance through real estate as a vehicle, I'd be further along today because I wouldn't have had the hang up with, oh, I got to do real estate. I got to do a deal. It's not deals, it's money. Everyone in real estate only gets into real estate because they want to make millions of dollars. And if you could show someone as a partner or an investor or for yourself and you and your family how to make millions of dollars with just this one skill, understanding money, capital, and how things work, you'll be better off. And if you're going to use real estate to do it, understanding the income and the expenses of real estate, rent, expenses, the NOI, cap rates, all of the terms that you have to learn as it relates to being in using real estate as the vehicle, multifamily commercial real estate is what I'm talking about. And then tying it with finance, capital, the cost of capital, the debt, financing, terms, taxes, interest rates, everything that goes along with it. I can help you guys do that, right? If you keep watching and going through the videos, or you can get my book. You can go to bell-capital.com/book. That's our real estate book. And you can look in there because I have a ton of terms in there, how to look at this. I break down each thing that you have to look for inside of a multifamily real estate deal. I go over all the terms and the rules of thumb as it relates to the expenses are concerned for the property that you can expect if you're underwriting an actual real estate deal. And then if you're looking from the money side, I have that new book, which if you go to bell-capital.com/wealth book, at the back of that book, we have bonus terms. These are all the things that you have to understand for wealth. But inside of wealth, because it's about money and it's about assets and about investments, you will learn all the terms that are associated with that specific management of capital, management of money, because creating wealth means you're managing your own money or you're managing your investments, you're getting a return on that. And for me, I just use real estate because real estate is a very simple asset for me to understand it. Number one, it's real. Number two, it cash flows. Number three, it protects your capital. Number four, it gives you tax advantages. It has everything that I need, and I'm just a simple guy. All right, so I hope this helps you. But the biggest thing I want you to walk away with is real estate is really a money game. So if you're going to play the real estate game, know that you're playing the money game. Understand that you're really managing capital, managing money, and you need to learn finance this way through real estate as the vehicle where you take the money and you invest the capital or the money in real estate. The money is made inside of the real estate because the real estate itself makes the money, and then that money expands, grows, and multiplies, which you guys have heard me say that. You need to learn number one, you already probably know how to make it, which is earning money, right? Number two, you need to learn how to save it or keep it. When I say save and keep, I'm not talking about save your money into some savings account. I'm talking about hold your money in a place where you actually minimize your tax burden. You pay less money in taxes by doing what? Finding an actual vehicle that you can actually put your money into that gives you the tax advantages, which is real estate, which is how you multiply that money. Because you keep more of what you make, you invest that money in something that multiplies it, like real estate, and then that money multiplies inside of a real asset like real estate because it, excuse me, it is the best, the very best, I believe, asset class on the planet as it relates to creating wealth based on it being super sophisticated for the finance world because it has all the bells and whistles and it's a real asset that an everyday investor or everyday person like myself, a hardworking person, business owner, entrepreneur like you and me, we can actually get involved in it and without all the headaches with you don't need a college degree, you don't need some crazy business plan, you don't need any of that stuff. You just need motivation to be able to learn this business and to become a young tycoon or an old tycoon, whatever you want to be, but you just need the wherewithal to understand that you are playing the money game, right? And once you get that, I promise you, man, this all makes sense. It really does. So, like this video, share the video, comment on the video. If it's got confusing, don't be confused. Just tell yourself, I'm not confused. Listen to it again. I'm not confused. Or you can listen to it over and listen to the video over and over again. Get comfortable knowing that real estate is really a financial vehicle. It's a money product. You're in the money game, right? You just need to make sure that you understand the vehicle that the money is in. And I promise you that vehicle will take you as far as you want it to go, as long as you're playing this game. All right. So let me know if you need anything. Leave me a comment in the video. What did you learn about this? Did you finally understand that you are now playing the money game? If you're going to be in this business and you want to become a tycoon in real estate's a money thing. It is. No matter what you say, no matter what you want to pretend it is, all money goes to real estate. All of it. Business owners all put their money in real estate. Private equity people, money in real estate. All this stuff you see behind me, this is really a money. This is really money moving towards real assets, no matter what it's packaged in. Energy, bills, bonds, whatever. It's there. All right. So let me know if you guys need anything. Let's get after it today. And boom.